Welcome back. You're watching Commodity Champions, and we will now shift focus to edible oil prices. The Department of Food and Public Distribution has advised the Solvent Extractor Association of India to inform its members to ensure that there is reduction in edible oil prices and to pass on the benefits to consumers. While prices of edible oils have witnessed a sharp decline in past 6 months, the Indian prices have not declined as much, at least not on the MRP. To discuss this, we have with us Mr. Atul Chaturvedi, Executive Chairman of Shree Renuka Sugars, and now joining us is Sudhakar Desai. He's CEO and Director at Emami Agrotech. Mr. Chaturvedi, I'll start with you first. And this is something that we were talking earlier as well, that while the spot prices are trading below MSP for mustard, the international prices have declined so much. The MRP clearly hasn't shown that or reflected that.
No, you're absolutely right. In fact, let me put the record straight. In fact, it's actually wrong to compare the wholesale prices with the packed goods prices. In fact, whatever is quoted on the exchanges is on a plus tax basis. So when we are comparing the prices on the market prices and the packed oil prices or other MRP, the picture is that you first add another 5% as tax. And then you have the wholesaler margin of close to about 4%. Then the retailer margin of anything between 6 to 8%. And then you have the packing cost of anywhere between 6 to 8%. And plus the distribution cost of about anywhere between 5 to 7%. So overall, you have a cost plus of about 25 to 30%. So if the MRP is 25 to 30% higher than the wholesale price, then it's not very high. But to agree to what you're saying, the prices in the international market have been falling so rapidly, and the effect of that to come into the at the retail level, it takes a minimum of 3 weeks. And the other problem is that once the goods leave the factory premises, you cannot change the price. There's a rule which says that the MRP needs to be printed in the factory itself. So what mills normally do is try and keep the MRP a little high. So if in the event of prices going up, they don't need to do anything about that. But having said that, we are aware of the problem. And in fact, let me correct that the Food Ministry has not advised SEA, but SEA on its own has actually advised the members to bring the price down as far as the MRP is concerned. So we anticipate at some stage the government will start looking at these things. So before that, to anticipate that, we've already advised our members that you should correct the MRP in line with the fall in market price. And I'm sure our members would definitely take action suitably.
All right, fair point that. So just to put it in context, when you look at the last 1 year, we've seen as of now at current rates as well, sunflower oil price is down by 53%, crude soy is down 45%, crude soy oil also is down by nearly 31%. And this question is to you, Mr. Desai. We've seen prices decline quite sharply, and the demand for Indian markets has started to come back in March. Jan and Feb weren't so great as well. And the mustard, the crop is looking good. We've seen prices there decline as well. With the kind of decline that we've seen in prices across and with the kind of import duty that we're looking at, what is your sense on what is the step forward?
Step forward is very serious, and we need to really take a look at what's happening in this veg oil ecosystem. Number one, due to steep fall in prices of 45-50% that which you mentioned, going back.
All right, we'll try and connect with Mr. Desai yet again. But Mr. Chaturvedi, the same question to you. I understand that you and the association have been trying to talk to the government to ensure that the duties are increased, because that is impacting adversely to the stakeholders, especially farmers now.
Well, absolutely. In fact, this is the time when our mustard is getting marketed, and mustard prices now are selling much below MSP. Almost something like 15 to 20% below MSP. And this is going to demoralize our oilseed farmers. And we've been pressurizing our oilseed farmers that you need to keep increasing, because whether we like it or not, our import dependence is almost something like 65%. And this year, they have actually responded big time. And in fact, our mustard crop this year has probably been one of the highest ever. So if the prices sell below MSP, they are bound to feel disappointed and maybe demoralized. So it's important at this time of the year, when mustard is getting harvested and actually being marketed, we need to protect our oilseed farmer if we have to see them diverting their lands towards oilseed, which is the need of the hour. So we hope the government sees the situation and takes suitable corrective action ASAP.
Oh, well, absolutely. Mr. Desai is back with us. And Mr. Desai, you were telling us on what steps need to be taken in this direction. What's your sense?
Yes, yes. I think very clearly the mustard seed prices going below the MSP, like 5450 is the price of MSP, and market is operating at 4800. So I think, see, on one side we are producing more and more. Mustard is a fantastic crop. Now is the time to solve a couple of issues. Number one is today the refined oil is actually coming up in a big way. You are talking about the availability. Today the port stocks are about 900,000 tons, out of which palm oil is 300K, 187K, which is 60% is refined palm oil. So I think that is adding a lot of pressure in the prices, wherein we have seen a shift of focus from consumer to farmer basically right now. So our recommendation as IVPA has been to restrict or increase the differential between CPO and crude oil to 15% right now as against current differential. This will help mustard farmers. Number two, also relook at the absolute duty also because we all have a responsibility to see the mustard seed prices to go above MSP. Right. Otherwise, how are we going towards self-sufficiency basically? So I see these two as important thing. Third one on the prices, today we have a very strange confluence of prices. Palm, sunflower and soybean oil all at the same price. Today consumer is very happy that the prices have not only come down, but all oils are available at more or less same price. So this is what is happening at the moment in the markets.
Mr. Desai, also, you talked about the availability, which is quite enough right now. When you look at the imports as well, they have continued to increase as well. But overall demand on ground, how has that been?
Demand has been very poor. Actually, I would say that it has come down at least 10 to 15% drop in demand, which is typical around these months of April, May. But consequently, I must also point out, imports on average Jan, Feb, March has been about 12.6 lakh tons. And in April, May, June, we are expecting only 9.5, 9.7 million tons because mustard will complement the availability. So today port stocks about 9.3 lakh tons and expected imports of on average about 9 lakh tons. Availability is not an issue. I think the pipeline is very, very dry due to the risk of the markets. I see most of the dealers, India, operating on just in hand-to-mouth situation. So prices have gone down enough. I think once we see the uptick from here, from 975 stability, I expect demand to be a little bit more robust in the month of May.
Okay. Well, this is a question to both of you as industry heads. And Mr. Desai, I'll start with you on this one. There isn't enough availability, as you said, of edible oil right now. We've seen prices decline quite sharply. If you were given a viewpoint of the next 3 months, what is your sense on what range the prices could move in, one? And the second, what government policy would you want in to come in right now? The taxes part you both have discussed already, but with the kind of weather that we are envisaging from here on, what is it that you would want to take in account?
Yeah, I think the outlook of prices will remain subdued. Okay. I'll tell you why. Because palm oil today, $975 in the forward markets, like July, August, already we are seeing $100 inverse. That means forward is available at about $100 cheaper price.
Okay.
Having said that, nearby palm stocks are very, very tight in Malaysia and Indonesia.
Okay.
And it's now a question of soybean oil prices, which are very rarely at the same price as palm oil. Soybean oil will have a higher chances of going up.
And I think sun oil has attracted a lot of demand by being at the same price as sun oil,
Yes.
which is typically $400 higher normally. I think it has attracted a lot of demand. So in order of stability, I would expect first soybean oil to correct itself a little bit,
Okay.
sun oil to follow.
Okay.
Palm will have to stay put and stable because in case it needs the world market, especially Indian market, it has to be slightly, at least $50-60 cheaper than
From these
soybean
current
oil.
levels. All right.
So
A quick
this
one
is
to you as well, Mr. Chaturvedi. What's your sense on prices? Further decline
would-
from here?
Now, I would by and large agree with what Sudhakar is
Okay.
saying, but the bias for the markets to fall from this level is relatively less.
Okay.
In fact, we would probably feel that the worst, as far as the price is concerned, is
It's over
probably
with.
behind us. But palm is a little too high price. It has to fall further because the differential with soft oils is absolutely not there. It can't be selling above soft oils. So it
All
has to
right.
come down. Yeah.
All right. So that's a view on the prices and, of course, the expectations from the government in sense of measures going forward. Thank you so much, Mr. Chaturvedi and Desai, for following us. With that, it's a wrap on this edition of Commodity Champions. Thank you for watching.